Hello, my name is Andrew Pang. Welcome to another edition of CMS Forex News. Today is Friday, July 25th, 2008. Japan's National Consumer Price Index for June rose 2% compared to last year. It was the fastest pace in 10 years. Inflation excluding food was up 1.9%. Looking at inflation minus both food and energy, prices were up 0.1%. It's easy to see that consumers are paying more for gas and electricity. In a measure of consumer inflation around the Tokyo area, which leads the national survey by 1 month, prices were up 1.6%, lower than expected. CPI excluding food and energy was also lower than forecast. The prices that Japanese corporations pay for services rose 1.2% in June compared to last year. May's figure was revised up as well. Transportation led the increase, climbing 6.2%, even as other services like communications and advertising were down for the year. In the UK, GDP growth in the second quarter met expectations of a 0.2% quarterly increase and a 1.6% increase on a year-over-year basis. The quarterly change is the slowest pace in 7 years. The troubles that started with the financial turmoil and a housing correction have now seeped into the banking, construction, and manufacturing sectors. The pound-yen pair fell sharply during yesterday's session and continued falling to start today's global session on the back of weaker global stocks. Risk appetite returned prior to the New York Open, and the pair surged almost 270 pips from its intraday low. This puts the pair back above the level at which it started the week. Positive results from the U.S. helped spur a rally in U.S. stocks in today's session. Orders for durable goods surprised on the upside, increasing 0.8%, a positive piece of news that shows U.S. manufacturers doing better than expected. Orders excluding transportation were up 2%, the highest this year. Sales of new homes were down 0.6% this month, but only because the figures for the month of May were revised up modestly. For June, the annual pace of new home sales was 530,000, better than expectations. The UMich Consumer Confidence Index surprised forecasts and improved to 61.2 for July's revised version. It was at 56.6 in the preliminary release. Both current and future expectations saw an increase, though the gains may be a temporary bounce, as consumers may have at first overestimated how poor conditions were. The euro-dollar pair gained overnight on the hawkish comments from a member of the ECB Council who said that the bank still had room to raise rates this year. The euro tested 1.5750 but reversed course after the U.S. orders data. The pair fell to trade near 1.57 by mid-afternoon. The week has seen a strong swing in favor of the dollar. European fundamental data was quite poor. Oil prices kept falling, and the crisis surrounding Fannie Mae and Freddie Mac seemed to be alleviated by the government bailout. After a very brutal Thursday session on Wall Street, today's positive U.S. fundamental releases helped spur a rally. The dollar-yen pair pared its overnight losses and was back at the 108 level, which has acted as a resistance recently. The U.S. dollar-Canadian dollar broke above another level of resistance at 1.0150 today, climbing to test the area near 1.02. That's a 200 pip swing since the pair tested parity on Tuesday. Falling oil prices and a weaker than expected retail sales report on Tuesday have been the main catalyst for a weakness in the Canadian dollar. The U.S. dollar-South African rand pair had a topsy-turvy week. The dollar gained in the middle of the week on an increase in risk aversion, but with today's increase in risk appetite, the rand pared its losses and was trading back near the 7.59 area. South Africa's interest rate is at 12% currently, making it a key destination for carry trade. Important releases next week include GDP and non-farm payroll data from the U.S., a slew of releases from Australia including retail sales and trade balance, and data on consumer inflation from the Eurozone. And that wraps it up for the week in Forex News. Join us again next week right here at cmsfx.com.